Welcome to Share Talk, the only podcast where investors come first.
Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Wednesday, the 2nd of December. And starting off with an hourly chart, because obviously there's not much data with the brown shield and the old two shields. But what we can say, hopefully, is that while we're above the initial resistance at 20 pence from yesterday, we could see the top of the channel on the hourly chart up to 26 pence over the next few days. Basically bullish while we hold above the 19 to 20 pence area. Stock which is not rather less difficult to fathom at the moment is Block Energy, and here we had a bit of a pullback from the best levels of recent weeks. We hit about 5.5 pence in the middle of last month and then came back. Basically the stock coming back to retest former resistance around the 3.5 pence area, so that was there in March, also in August, and then just at the beginning of this week. But at least while we're above 3.4, 3.5 pence, looking for a retest of the best levels of last month at 5.5, and hopefully up to the top of that rising trend channel from February up towards 6.5, maybe even 7 pence by the end of the month. But all of that while we're above the 3.5 pence zone. Stock which was looking as though it wanted to, was threatening to rise quite well last week is Concepta. In fact, the start of the breakout was basically back in the middle of last month around the penny level. We had that consolidation, good bull flag there above old resistance, and the gap higher today. View at this stage is that while we remain above the old May resistance at 1.8 pence on an end-of-day close basis, we should see Concepta up towards the top of the broadening triangle from August last year as high as 3 pence, hopefully over the next couple of weeks. Another stock which is looking healthy and has been healthy is the next one here, which is Eternity Networks. Here, breaking the 200-day moving average after quite a while. I think the last time was in May, so it's been quite a long time coming, this change of trend. But while we're above 24.9 pence on an end-of-day close basis, looking towards 33, 34 pence at the top of the June rising trend channel. If you're a fan of the stock, maybe you could dream of up towards 50 pence, which would be a late May resistance line projection. Early back below, I suppose, the 20-day line at 21 pence, really delaying the upside scenario here. We saw that trend line break that we had early that last month at 19 pence, which started off the current rally. No such problems with upside at Ectech. Here it's been one of the stars of the last few weeks. I think everyone and their mother trying to claim credit for this rally, but good luck to them. Here we've got the rally started with the break of that resistance line there from June around the 0.55 level. The target here, the optimistic target here, was actually to hit the 1 penny level at the top of the rising trend channel from June, but that looks as though that is going to be easily sort of met and conquered over the next few days. The old high there was around the 0.87 level. While we're above 0.87, still looking for further upside. Best case scenario the next 1 to 2 months would be that February resistance line projection as high as 1.6 pence, and hopefully we'll see that relatively soon, maybe even sooner than the next 1 to 2 months. But upside argument valid while we hold above 0.87 on Ectech. Good breakout today from Galileo. It's been some sort of couple of weeks in the making, rather delayed. We had a consolidation over, I suppose, the last 6 weeks or so between 0.8 and 1 pence, but finally broke that resistance line there from May at a penny on the close yesterday. And while we're above a penny, looking for a penny and a half, which is the top of the rising trend channel from the end of March. Hopefully we can see that by the end of the month. Early at this stage, back below, I suppose, 0.9, really delaying the upside scenario on Galileo. Next up, a stock which I don't actually remember doing, but apparently I did a little while back, and comes in the form of Hive Group. Here we've got a situation where the shares have broken a line of resistance from the middle of last month. That was running around the the 98 pence level, broken that very strongly on the close yesterday, and then followed through today. Difficult to see exactly how high the shares are going to go. Best guess at the moment is that resistance line, that upper parallel I've drawn there at 160, and hopefully we can see that over the next 4 to 6 weeks. Upside valid while we hold above the 20-day moving average as a trading stop at 89 pence. Time for another hourly chart, just because obviously this is a new situation, and the stock in question is Kisto, which seems to have many traders gushing, especially if I can get the right epic code in there. Here we've had decent break, I suppose. Initially was through the initial high there at 114. It looks like we're in a rising trend channel on the hourly chart, with the floor of the channel currently around 124. Top of the channel heading towards 145, hopefully by the end of this month. And the upside very much in place while we hold above the initial resistance of this week at £1.27. So above 127, looking for 145 on Kistos. That's the correct name of the stock. Onto a stock which one would have feared might be rather hurt by the vaccine joy that we're currently experiencing at the moment, but good to see that Mega Diagnostics still pushing higher. 3 solid candles there over the last 3 sessions, 3 solid green candles, that is. Interesting that we had a narrow bear trap below the former November support at 41 pence, so below this week 40.02, which was a nice bear trap rebound. The view at this stage is, at least while we're above the 200-day moving average, that's the black line there at 52 pence, we should head back towards the 50-day line at 75 pence over the next couple of weeks or so. That's the 75 to 80p, the main resistance there. If you are a Mega Diagnostics fan or groupie, as there seems to be sort of every other person on Twitter at the moment, the best case scenario target here over the next 2 to 3 months is up to £1.40, which is that May resistance line projection. But to the moment, just looking for 75 pence or so while we're above 52 pence on Mega Diagnostics. Panthera is next, and it's nice to see the shares stretching higher and in a way exceeding expectations. Neckline resistance from the end of October at 14.5 pence, so above that, looking for further upside, and the new improved price target here is up to 25 pence, which is the top of a July rising trend channel, so looking pretty well set there, with all the near-term moving averages rising well, even the 200-day line there at 6 pence. Just 3 or 4 to go in this rather marathon session today. First is Rainbow Rare Earths, which continues to push ahead after last week's placing. I think it was £2.5 million. We've hit the top of that trend channel from October, so call that, say, 11 pence, but end of day close above 11 pence could take the shares up to a new target there. Top of that rising trend channel from June last year, as high as 14 pence, which would be quite a result for a company which has just done a placing. But that shows you presumably how positive people think rare earths are at the moment on a fundamental basis. Stock which I suppose is only second to Mega Diagnostics in terms of people calling the shares higher. It's Rambler Metals. I believe it's a copper play. I can't quite remember now. But what we've had here is a bear trap, I suppose, from below the late October support 0.3, and then also the 0.3 initial November support. Should at least see an attempt by the stock to take that 0.3 level out over the next couple of sessions, or hopefully by the end of the week. But the view here is that we're in that falling trend channel there from October, and while we're above the floor of the channel at 0.2 pence, we should hit the top of the channel at 0.4 pence, hopefully over the next couple of weeks. The big point to note here, I suppose, is the way that even though the share price went much lower in November, the RSI kept going higher, and it's still going higher now. So that looks like a very strong bullish divergence situation, which you don't often see. that would suggest that hopefully we'll, over the next month or two, we'll try and take out that gap to the downside from October. So let's see how that particular situation pans out. But above 0.2, looking for a relatively smooth journey to 0.4, hopefully later this month. A couple of stocks to go now. The first is Starvest, which has been a star performer over the course of 2020, one of the few. A nice breakout this week through that September resistance line there at 19 pence. And while we're above that, looking for the top of a broadening triangle from back in December last year, this time last year, currently pointing at 35 pence. Hopefully that could be seen over the next 4 to 6 weeks for Starvest. Finishing off with Extract Resources, which had a decent announcement today. Here we've had actually one of the better signals that you get on the charting type of perspective. We've not only had three support points there for the shares above a penny, arguably 4. A little bear trap last week as well, so that is a positive for the stock, and a gap today through the 200-day moving average at 1.16 pence, at least while we're above the 1.14 area, which is the floor of the channel from October last year. Looking for minimum retest of October resistance around 1.5 pence, and hopefully on a longer view, maybe the next 1 to 2 months up to 2.5 pence, which we've been looking for quite a while, obviously retesting the September resistance zone. That's it from me today. More updates tomorrow.
Thank you for listening. Remember to visit our website for more news and other podcasts at www.share-talk.com.